Welcome back to Dinar Community, your trusted source for verified updates and deep dive insights into the rapidly evolving landscape of global currency movements. For years, savvy investors have monitored the global financial ecosystem for subtle signs of a major shift, particularly involving currencies such as the Iraqi Dinar (IQD) and the Vietnamese Dong (VND). What was once labeled as speculative noise is now being reshaped by quiet yet deliberate moves from major financial players. One of the most significant developments comes from HSBC, one of the most influential global banking institutions. While the bank hasn't made flashy public announcements, internal movements suggest a seismic shift. HSBC has begun carefully activating internal systems and operational protocols specifically designed to process the IQD and VND, setting off a wave of renewed interest and speculation across the investment world. HSBC's role isn't peripheral. With its expansive history and global influence in foreign exchange, trade finance, and liquidity management, the bank's actions often reflect broader institutional directions. This isn't just a casual update, it points to deeper strategic planning. Quietly, HSBC has launched a series of controlled procedures that many believe could be the early stages of a full-scale integration of these currencies into the global monetary system. Inside HSBC's currency strategy, headquartered in London, with a presence in nearly every financial hub worldwide, HSBC's unique geographic and institutional reach makes it a key player in facilitating high-level currency transactions, especially involving markets with developing economies like Iraq and Vietnam. Sources close to the bank's internal FX operations have confirmed that HSBC's Global Banking and Markets division has enhanced its foreign exchange protocols. These updates are believed to be part of HSBC's preparation for potential liquidity events tied to the IQD and VND. Major financial centers, including New York, London, Dubai, and Singapore, have already activated private banking channels for these transactions, establishing invite-only systems for qualified clients. This new phase of preparation isn't open to just anyone. To be eligible, clients must typically hold a Premier, Advance, or private banking account with HSBC. From there, applications undergo strict internal scrutiny. Dedicated FX teams evaluate compliance with international standards, such as OFAC Office of Foreign Assets Control and FATF Financial Action Task Force guidelines. For Iraqi dinar redemptions, the process is particularly stringent. Clients are required to provide full purchase documentation, certified authenticity verification, and even a written declaration about how the exchanged funds will be used. Each redemption request is carefully logged within HSBC's internal audit and risk systems. The objective: ensure legal and regulatory compliance while shielding the bank from exposure to money laundering or fraud. Expert commentary and confirmed reports. Maria Collado, a senior foreign currency analyst at Global Monnier, confirms that HSBC's slow and deliberate rollout is consistent with its global strategy. When HSBC starts moving in a certain direction, she says, it usually means something is already moving behind the curtain. This is reinforced by reports from former HSBC insiders, now working as financial consultants, who have disclosed that HSBC's internal APIs are receiving steady updates from the Central Bank of Iraq (CBI) and Vietnam State Bank (SBV). These updates are generally indicative of behind-the-scenes preparation for substantial currency shifts. Also notable is HSBC's increasing exposure to sovereign debt instruments from both Iraq and Vietnam. When combined with FX desk activation, this paints a compelling picture of deliberate planning, not reaction. Special considerations for VND and IQD investors. Vietnam's improving trade position and expanding regional partnerships make the Vietnamese Dong an easier fit for global financial integration. HSBC already maintains deep operational infrastructure in cities like Ho Chi Minh City, Kuala Lumpur, Bangkok, and Hong Kong. For investors holding large quantities of VND, these locations serve as primary processing centers. HSBC does not process VND redemptions through typical retail currency boards. Instead, high-value transactions are routed through its private wealth teams, which often offer negotiated rates. Any transaction over $50,000 triggers higher-tier compliance checks. However, successful clients may gain access to reinvestment products, hedging strategies, and wealth planning tools. In contrast, HSBC enforces far more complex requirements for Iraqi dinar holders. Each IQD note must be accompanied by a verified serial number, purchase receipt, and authentication from a licensed dealer. Additional requirements include biometric verification, international tax disclosures, and identity screening. Due to geopolitical sensitivities, IQD redemptions are often routed through HSBC Middle East Holdings, with Dubai acting as the central clearing hub. These transactions are handled exclusively through private appointments, with absolutely no walk-in service. Qualified clients may receive structured rate offers, sometimes above market value. What about the Zimbabwean dollar, ZWL? Currently, HSBC has not initiated any public or private redemption programs for the Zimbabwean dollar. Due to ongoing economic instability, failed redenomination efforts, and inflationary issues, the ZWL remains largely off the radar for formal processing. However, unconfirmed reports suggest that HSBC's wealth management teams are observing the situation, especially amid renewed IMF-backed reforms in Zimbabwe. Some investors have noted that minor ZWL positions have been quietly absorbed into emerging market funds through HSBC's regional offices in Mauritius and South Africa. Though not confirmed, this could indicate early internal testing. For ZWL holders, documentation and readiness are critical. Should HSBC activate redemption pathways, early preparation could be the deciding factor between missed opportunity and financial windfall. A broader financial shift. This is about more than currency conversion, it's about institutional recognition. Once dismissed as fringe speculation, the IQD and VND are gaining ground within the formal banking sector. HSBC's silent pivot proves this. They are not testing the waters, they are building a bridge. As Iraq improves its fiscal policy through oil-backed financial reforms, and Vietnam strengthens its position in international trade, the likelihood of currency revaluation becomes increasingly grounded in real-world economics. HSBC, with over $3 trillion in assets under management, isn't reacting to speculation, it's responding to unfolding global realities. Financial analysts now believe that other major banks like Citibank, Standard Chartered, and Deutsche Bank are watching HSBC closely, poised to follow its lead. For currency holders, the message is clear: preparation matters. Maintain active relationships with reputable banks. Keep your documentation flawless. Stay informed on regulatory and market shifts. What comes next? Industry watchers expect HSBC to expand its IQD and VND services through digital platforms by late 2025. Features such as rate lock FX accounts and secure AI-powered verification systems are already in internal development. These tools would allow HSBC to onboard high-net-worth clients swiftly and efficiently while managing regulatory risk. Investors hoping to participate in this evolving financial event should ensure they are well positioned now, not later. Relationships, documentation, and account status will determine access and timing. The financial world is on the cusp of transformation. Revaluation is no longer a distant possibility, it's becoming operational fact. And with HSBC taking the lead, the landscape of global currency is being reshaped before our eyes. Like and subscribe for more videos.